Good morning and welcome to a special Weekly Insights with John Plassard. We were honored and privileged to be invited here to Berna to speak about the economy and showcase Mirabaud expertise to several members of the Swiss Parliament. It is an opportunity to put forward all the good things we think about Switzerland. If there is one idea that is shared by everyone, the word isn't too strong, is that Switzerland is beautiful. Magnificent landscapes in the mountains, near lakes, and in many typical towns. The country's economy is stable with extremely low unemployment, a strong currency, and inflation below the central bank's mandate. In short, an ideal picture that would make many nations green with envy. The only problem is that in terms of stock market performance, the Swiss index has so far been one of the worst in Europe in 2023. However, 2024 could prove to be a totally different story for the Swiss model that is not dead. For example, the adaptability of Swiss companies, which are forced to adapt constantly, never letting their guard down and constantly striving to remain competitive. Second, the ability to adapt is also rooted in Swiss culture. Perhaps it's because we change head of government every year. This culture is also reflected in a savings rate that is historically high enough to cope with more uncertain times, anticipating darker days without actually facing them. And third, the Swiss labor market has a relative good handle on cyclical shocks thanks to its macro flexibility, a country's ability to recover from a recession without seeing its unemployment rise too much. Immediate short-term working is also a feature of the Swiss economy during a major crisis. Last but not least, almost continuous dialogue between union and employers. According to a World Economic Forum report on global competitiveness, Switzerland is the country where relations between employers and employees are the most collaborative. And finally, the SNB plays a crucial role. Unlike the ECB, price stability, the Swiss National Bank mandate is to conduct a monetary policy designed to ensure that the currency retains its value, to preventing inflation from rising too much, and that the economy can develop optimally. While the SNB has historically clung to the interest rate differential with its neighbors, i.e. the Eurozone, it seems that the coronavirus crisis has left it unmoved, as demonstrated by its latest meetings. Thanks to the ECB, we can therefore look forward to a year 2024 in which the Swiss franc volatility is under control. As for the Swiss index in 2024, there are many arguments in favor of a rebound, including the following. Solid fundamentals for the Swiss economy, the one-off will fade. Indeed, the index was impacted in 2023 mainly by the poor performance of some big stocks such as Roche and Nestlé. More attractive valuation of Swiss equities by historical standard, a gradual recovery in the global economy and in Switzerland's main trading partners, a stabilization of the Swiss francs against the euro and the dollar in particular, increased investment in infrastructure, solid earnings for blue chip companies and especially small and mid caps, and finally continued inflow into Swiss funds, in particular in face of geopolitical uncertainties. In conclusion, ever since the Swiss real estate crisis of the late 80s, analysts have been cautious, even negative, about the future growth of the Swiss economy. However, over the past 30 years, a growth forecast have always been revised upward. The same will be true for 2024. Remember that the Swiss economy is like a reed. It bends, but it does not break The same will be true for the SMI and for the small and mid caps in Switzerland. Thank you very much. Have a great week, stay safe, and keep on winning.